Hello and welcome everyone to today's Gold and Silver Club, presenting the Commodities Corner, presented by myself, Phil at the Gold and Silver Club. Today we will be reviewing the commodities markets this week. We'll look at the top trades of the week. We'll look at live technical analysis and trading. We'll be identifying highly profitable trade setups. We'll be covering the week ahead, so the key events you need to be aware of on commodities next week, and of course answering any questions you may have on today's call. So first of all, the bullion prices fall overnight on Chinese gold scandal as Iraq tensions fade. So gold prices traded below the recent 9-week high on Friday as reports emerged on Thursday that the Chinese authorities are uncovered 15.2 billion illegal gold financing scheme that dates back at least 2 years. So the report put downward pressure on the precious metals due to the immediate uncertainty of the situation. China is, of course, the world's largest consumer of gold and is estimated that up to 1,000 tons of the commodity is tied up in Chinese transactions. In the Middle East, the civil war in Iraq is still an issue for the marketplace, but it's temporarily moved off the front burner. If tensions flare up again in the coming days, this matter could very swiftly move back into the spotlight and once again significantly impact the commodity prices. In other commodities markets this week, crude oil prices touched a 9-month high on fears that the conflict in Iraq could split the country and hit oil exports. However, over the last 24 hours, prices have retraced slightly as production has been largely unaffected by the fighting. So whilst in the US, the disappointing spending data released on Thursday sparks concerns over the outlook for the demand of the world's top oil consumer, which also put moderate downward pressure on prices. So as the saying goes, volatility equals value. The back-to-back reports this week have once again presented us with multiple opportunities to trade the markets both ways for lucrative gains. So we'll take a look at those very shortly. Before we do so, I'm Phil Carr, professional trainer and speaker. I am, of course, the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications, speak at numerous trading seminars, webinars, and workshops. Joining me in running the Gold and Silver Club is Nik, professional trader, investment analyst, and speaker. Nik began his career within private wealth management in 2002 before making the transition into proprietary trading. And prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset, and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial TV. So we'll just check out the gold price at the moment. We're currently trading about $100, 100 points or 10 US dollars off the highs of the week at 13.25. So we're currently at 13.15 on gold. We'll take a look at that on the charts very shortly. Before we do so, the top trades of the week using the Gold and Silver Club trading strategies. We've had a number of top trades this week. First of all, earlier in the week, we had, this is actually going back to last Friday, nice rise trade for the price to be higher on coffee. We formed a nice hammer at a very key level of support, and that just very simply produced a nice move above an entry price of 106.50. We've had some nice oil moves this week. This was earlier on in the week, nice bounce off the 105.32 key level of support, got in at 106.15. Nice surge there on Tuesday for the price to be higher on a rise trade. Wheat, we got a decent move from a rise trade earlier on this week as well on wheat there for an entry above 577. And we've also had some additional opportunities, which I'll talk you through actually on the metals this week as well. So before we go into that, we're going to be using the rise and fall trades on Binary.com. Very simply, if you select rises, you win the payout. If the market exit price is strictly higher than the entry price, and if you select falls, you win the payout if the market exit price is strictly lower than the entry price. So very straightforward way to trade the markets, but very profitable. So we'll just take a look at the live technicals. What I'll do, I will share my screens with you so you can have a look. And let's just do this. Okay, you should be able to see my screens very shortly. Okay, fantastic. Right, the first market we will take a look at is going to be copper. Now, copper has had a tremendous move over the last couple of weeks. You can see here on the daily action, we've got a great, really decent V-shaped reversal pattern here, which is broken out to the upside. We've actually just this morning come up. If you take a look and go back on copper on the chart, going back to about mid-March 2014, you can see we've had a very strong upward trend here with the copper market reaching higher highs, higher lows. We came down, we broke down from that trend, came and found support, key level 3.00. We've since broken out from the neckline at 3.0738. We've come all the way up here, had some lovely breakouts, and just coming up to a resistance level at just shy of 3.1845. The previous trend line here is now presenting resistance. So we had a support level there. It's now presenting resistance, and we've got a nice inverse hammer forming there at the moment. So just take a look at a tighter time frame. We can see there where we just started to bounce off. I will come back to copper and see whether we can have a nice sell short. It is worth bearing in mind we've had some lovely breakouts to the upside on platinum, on palladium here, and also platinum this week as well. So the metals, we've seen some nice breakouts to the upside across most of the metals. Now, gold continuing to hold onto its gains actually at the moment. Gold, if you remember going back to last week in the FOMC move that we got, gold actually found resistance at that key level going back to 1325 and 1321. We've come up this week and we've tested 1325. You can see where the market is still finding resistance at that downward trending, that resistance line here at the moment on the gold market. And you can take a look here. We're just in a nice area of consolidation. We're essentially moving between 1305 here up to 1306. 1305 to 1306 is support, and 1325 is the key resistance. This is the level we're looking for a breakout, either a break to the upside here above 1325, or we're looking for a breakout below 1306 and a break back to major support levels. We're just stuck in a consolidation at the moment on the gold market, and we're very keen to get a breakout from this in either direction, which will give us a very nice trading opportunity. If we take a look at silver, similar situation on silver. We're still stuck in a consolidation. We've had a nice breakout last week on silver above the 21, the 20 level all the way up to 21 after the FOMC announcement. We've since continued to consolidate. You can see it's grinding higher here. We've got up to about 21.18 this morning. A little bit of a retracement there. It just wants to see if it can break above really the 21.25 key level of resistance. We're just continuing to grind higher here on silver at the moment. We'll come back to that very shortly. Other markets which are worth taking a look at this morning are corn. Corn actually is a good sell at the moment. Corn, you can see on the daily, we came back, retested 445 resistance this week. We continue to sell. You know, the overall downward trend on here on corn is fantastic. Just stayed within a big downward trend over the last couple of months. Very similar to wheat as well. We've got an inverse hammer here on the daily yesterday for corn, which is just about triggered this morning. So we are looking for a sell short. So let me bring corn up on my screen and we'll look to trade that. Okay, so I'm going to go very simply, Barney.com, go to start trading, go to sectors, and I'm going to go to the agriculture sector, corn. We'll just go out to the futures, 11.50. I want to be out of this in circa about 3 hours time. We'll see if we can go out 4 hours. I think it's probably going to be capped at 3 hours. We can get out 4 hours. That's good. Okay. 81% payout. So I'm looking to do 2,000 for 4,000, $2,207 deposit here USD for a $4,000 payout. So again, we're breaking down here. Let me just show you that. At the moment, you can see corn breaking down. We've had a nice level consolidation around this 440 level, inverse hammer yesterday, which we're just breaking through the lows of that at the moment. And just the overall downward trend, very much still downward trending at the moment here for the corn market. And the fundamentals all lining up as well at the moment on corn with the corn production. So we'll go for a sell short. Just going to purchase that contract, 81% payout. Okay, fantastic. That has been done. So corn looking nice today. We'll take a look at wheat as well. Yeah, wheat, you can really see huge downward move that we had on wheat really over the last, it's been about 7 weeks now. We've just continued to come down and break down on the wheat market. If we just go out and look a little bit more detail, you can see we've had, just going on the daily here, you can see the tremendous move that we've had to the downside. We're continuing to stay within a downward trending channel here. We came down, tested major support at 567 to 565 is a key level of support here. We did get a bit of a bounce off there, but it looks like we're going to retrace on wheat at the moment. The daily, just break it down into a tighter time frame here. I like this as well for a sell short at the moment. Very clear trend channel that we've got on wheat. So also I'm going to go for a sell short on wheat just to be lower by the end of the day. So I'm going to go here just the grains, wheat. Okay, so 2,759 US dollars for a $5,000 payout for 81% payout there. Okay, that's on the wheat index. That has been done. Okay, fantastic. Right, we'll just take a look at the US dollar index as well. The US dollar index certainly continuing. We've had a broke through some major support earlier on this week. We broke through the 80-20 level. You can see here we've got a nice downward trend. I'll just take that off. We can redraw it in. We've got a major level which did get broken a little bit earlier on this week, which has found support over the last 4 weeks or so. The 80-21 level that did break down. We've come down low. Got a bit of a retracement just this morning. US dollar index continuing to look a bit weak here. We've got a nice downward trending channel. There is a hammer forming at the moment, but that could all still change. You can see this clear trend channel, which is starting to develop here on the US dollar index in the short term. We've also got the larger trend channel here as well. Looking to take out the lows here, 80-20, 80-12. We took out 80-20 yesterday, 80-12 to really bring this down. The key level below that, looking for a move down to the 80 level, which would be circa about a 10-point move for the US dollar index. Tends to move less in terms of daily volatility, average volatility about 30 points per day. But if we get a nice breakdown, we'll definitely take that short. And we're looking to go inversely long on gold based on that. We should get some good support for the metals if we do see that occurrence. Let's look at the oil, shall we? So oil looking pretty good here. We've got oil and we've got Brent and WTI. Both had decent moves. Nice hammer here. You've got a very clear level of support here on light sweet crude oil, WTI, West Texas Intermediate. You can see here, just going back to the 105.32 level, we've had a lot of day trades on this level this week. You can see each time it's come down to that key level, it's just provided a nice opportunity to take it back up to resistance, take it back up to resistance. So we are looking just for a long trade here at the moment on oil. Found support again at the 105.32 level. Unless we take out the 105 level, we're still looking to go long here. So just trade it within this consolidation. That's what we're looking to currently do. So I'm just going to go and take a trade based on, again, I'm going to go out to the sectors. And we are going to go out to the energy sector. Crude index here is the one which will give us the correlation. Okay, 81% payout. So we've got $2,204 there for a $4,000 US dollar payout. Okay, so all the market needs to do is close above 105.80 in the next 4 hours or so, and we'll win the entire payout there. So you can see this nice little hammer here, got a very clear level of support. Market is ricocheting between support and resistance it's about a 200-point range at the moment between 105.32 up to 107.32. So I'm just looking to take advantage of that range, get best price. I'll go in for a buy again, 81% payout for a rise trade. Excellent, that's been done. Right, just take a look. Also, we'll have a look at Brent crude oil. Brent crude oil, if I just go out on the daily, you can see previous resistance here. Just going back on the chart towards the end of December, end of November, providing support. So you've got resistance, providing a new support level. If that breaks, if 112.81 does break, we'll get a nice sell short opportunity. However, if it holds, that will give us a nice opportunity to take advantage of a pullback here. We've had some tremendous moves over the Iraq conflict. Actually, you've seen a lot of support for oil here. So if this is just a pullback to previous resistance, new support at 112.81, we could really be due a decent move to the upside here. So keep an eye on that. I prefer light crude oil at the moment for the buy, but I'm going to be watching Brent crude oil very closely today for potential buy opportunities. There you go. That's what I wanted. Okay, we're just going to take this out to a bird's eye view, just have a look at the markets at the moment. And so we've got some decent setups at the moment forming on the softs. Got wheat, corn, look good for a sell short at the moment. Light sweet crude oil looks good for a long. Copper, we want to come back to that, don't we? We'll go back to copper. Gold just stuck in consolidation. Oil, yeah, that's looking good. Brent, we'll wait to see if we get support. US dollar index to be confirmed. Silver to be confirmed. Coffee is one to watch if we can get a break and a close above the 180 level. I'll come back to that. Yeah, coffee, and we'll come back to copper as well. So coffee at the moment, it's done pretty well to hold on to support around the 160 to 165 level. You can see that's a key level of support. We're getting a rounding bottom here at the moment on the coffee market. You can see this is the sort of shape that we're getting here. So essentially the neckline to break here is 180 level, and then we should get a really nice surge to the upside. But if it can't do that, what you'll see is more like a consolidation between 160, okay, down to 180, which is a 200-point consolidation range, and we could get a sell-off and come back to the lower end of that channel. So it's to be confirmed at the moment. We are waiting coffee to see which way it's going to break out. We'll take a break above 180 or a break certainly below 162. So excited to get that breakout when it does occur. And we go back to copper here. Copper has been a pretty good buy, really, for the last 2 or 3 weeks here. We may get a bit of a short-term retracement at the moment. It is a counter-trend trade to short copper here, so it's a bit of a chance to trade to look for this to actually see profit taking at that resistance. You can see there that we have come up to key resistance. You've got some weekly key resistance levels. You've got the trend channel there. There's some key moving averages around the current price as well, where we could find some profit taking. So we could see here a move lower. We are in a key resistance zone. If you've been long copper for a while, as we have, this is a key take profit area anyway. So we're expecting a bit of a pullback. I will wait for that to fully form at the moment, today's candle, because it could be a little bit choppy. There's such a good momentum behind it. Again, you can see we've got a nice setup on the daily. Here it is, nice neckline to break above next week. This will line up really well for a breakout. So you can see the 3.1964 level. All we need to do is clear that next week, and we'll get a lovely surge to the upside. We'll get a lovely move. That might be ready by Tuesday's commodity corner. We'll see. But that's what I see at the moment forming. So really, I'd hold off on copper for now, particularly if you've made money on the upside here, as we have done, going long. There we go, is our nice breakout pattern. Okay, let's just see if there are any other setups that we need to go over at the moment. Corn looking good, wheat looking good for a short, coffee awaiting a breakout. Silver, yeah, silver's just consolidating. US dollar index, definitely watch that for the inverse correlation. Brent crude oil, again, want to see if 112.81 will hold as support. Gold awaiting a break above 13.25 or a break below 13.05. You can also sell off 13.25 and buy off 13.05. The price is just ricocheting between, it's about 200-point range, which you can buy and sell whilst the market. It's very common for this to happen after a huge surge like we had on the FOMC last week. Get a massive move, so this represented over a 450-point move in one day, and then the market just calls it, consolidates. It's making its mind up. It's a decision point. Go over to the weekly, you'll see a nice doji there, which is formed on the weekly, so it's real indecision in the market. The 200-point move all week for gold to stay in is pretty impressive, but what you'll find is the market will coil like that, and then it will get a really decent breakout. So here, again, you can see we coiled for about 7 days or so. Then we got a really decent breakout to the downside. So we should get a nice, don't miss it as well. When we do get this breakout, it'll be a good move, okay? So once we finally get that break, we will be looking to take advantage of that. So 13.25 or 13.05. Okay, so let's have a look at the key news announcements for next week, shall we? And see what we need to pay attention to. Okay, so first off, next week, we've got the Monday, the 30th of June, at 2:45 p.m. BST, 9:45 Eastern Time. We've got Chicago PMI. So the Chicago Purchasing Manufacturing Index, the PMI, that determines the economic health of the manufacturing sector in Chicago region. So a reading above 50 indicates expansion of the manufacturing sector. A reading below indicates contraction. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. Then Tuesday, the 1st of July, 3 p.m. BST, 10 a.m. Eastern Time, you have the US ISM Manufacturing PMI. So the Institute of Supply Management, the ISM Non-Manufacturing Purchasing Managers Index, the PMI, reports on the overall economic condition of the non-manufacturing sector, including business activity, new orders, employment, and supply deliveries. Again, that will affect the US dollar index, inversely correlated to gold and silver. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Then we have Wednesday, the 2nd of July, 1:15 p.m. BST, 8:15 Eastern Time, the ADP non-farm employment change. That report measures the monthly change in non-farm private employment. The release 2 days ahead of government data is a good predictor of the non-farm payroll report. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish, which will definitely affect gold and silver too. Wednesday, the 2nd of July, 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US crude oil inventories. Now, that data reports the number of barrels of crude oil commercial firms have in their inventory. The commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. The big one, Thursday, the 3rd of July, is US non-farm payrolls. It's normally on the Friday, but this next week is going to be on the Thursday. So do be ready for this. This will be a major market mover. You don't want it to catch you off guard. Very lucrative trading opportunity. So put it in the diaries. Next Thursday, 3rd of July, 1:30 p.m. BST, 8:30 a.m. Eastern Time, US non-farm payroll measures the change in the number of people employed during the previous month. It excludes the farming industry. Job creation is, of course, the foremost indicator of consumer spending, which accounts for the majority of economic activity. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish, or will have a big impact on gold, silver, and other commodities. And then next Thursday, 3rd of July, 3:30 p.m. BST, 10:30 a.m. Eastern, we've got the US natural gas storage report. So the Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas, whilst a lower than expected reading should be taken as bullish. Okay, so that will affect the nat gas market next week too. So those are the 6 major news announcements we need to pay attention to next week, guys, with the commodities. Of course, if you would like to take your trading to the next level, request information on the Gold and Silver Club live trading room program, our daily trade calls. You get all the exact same setup as us, all the screens that you've seen. You get also the addition of all the Gold and Silver Club indicators, the key indicators that we use on all of our charts, which are custom made to the Gold and Silver Club. So to find out more about how to join our international community, you can just go to www.jointhegollandsilverclub.com or contact us at either our London, New York, Johannesburg or Budapest, or our Hong Kong office. So very simply, whichever is nearest to you, you can call up and we will give you everything you need to get you set up for the live training room. And of course, make sure you get a subscription to the Gold and Silver Club. You'll get a free weekly report on the precious metals, energies and agriculture, live market analysis and prices to set you up for the following week. Okay, so there are the details on the screen, guys, and I wish you good luck with your trading. Have a great weekend. We'll see you back here next week. We'll see you for Tuesday's Commodities Corner and, of course, Fridays as well. So good luck with the trading, guys. Yeah, we'll see you on the next one. And thanks again to Binary.com and the team for putting on today's webinar. Okay, take care, everyone. Cheers. See you on the next one. Bye-bye.